Joining us now with what she is watching heading into the second half, Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. Steph, great to see you.
Good to see you, Melissa.
I think the big question for investors is, do you stick with what's working? Because what's working has had performances that just are gobsmacking. I mean, if you think about, a Meta or a Tesla, up, what is it, more than double, basically, so far this year, and then all the rest of the Magnificent Seven up between 30 and 50%. I mean, how can you keep going with this? Does it get concerning at some point?
Well, I think what's been encouraging over the last couple of weeks is we've actually seen a little bit of a broadening out so that it's not just the technology sector and the big 10, 7 or 10 that have led us so far this year, but you are starting to see interest in energy, in financials. Industrials have held in remarkably well. We know the whole onshoring theme. And so I think there are other places to focus on because I think that's where there's better value, but I don't want to give up entirely on tech. The total addressable markets are just so enormous and the growth is really just impressive. So I think you want to have a little bit more of a balance, though, into the second half of the year. And I would also add, not only in the sectors I just mentioned, but I do think the consumer has held up remarkably well. And I think you want to own discretionary there. I think you want to own housing there. And then I'm more confident now after Nike's earnings yesterday that the China reopening play is alive and well.
You mentioned housing, which is interesting because a lot of these names are at or close to 52-week highs, even when mortgage rates just hit 7% in yesterday's session. Is the supply-demand, lack of inventory issue enough to hold these stocks up?
Yeah, I mean, I think that's not exactly where your value is in terms of the pure play housing, but look at something like Lowe's or look at something like Home Depot. Home Depot is only up 1% on the year, and they just reiterated their guidance. So I think you can find other places within housing. In addition, you can look at a TJX. They have Home Goods, Home Sense. That stock is also flat on the year. So there are places within housing that I think you can pick at for sure. And then on weakness in some of the home builders, that's when you want to take a look. But we're 5 million homes short in the country. You have 5 million millennials that are just entering into the buying spree for the first time, right? And we've had 13 years of underproduction from the home builders themselves. So I still think that the housing market is a theme to play. Just want to be careful in terms of which names you're buying.
Mm-hmm. In terms of the broadening out, Steph, does that necessarily mean that we see a drawdown in tech shares?
I don't know if it's all or none, right? I mean, because I do think when you look at something like AI, I mean, I know it's been exploited. I know people are very excited about it, but it's going to be like a $2 trillion total addressable market by the end of the decade, Melissa. Cloud, it's going to be a $900 billion total addressable market by the end of the decade. Cybersecurity, so many ways to play that. And I think you also have a very strong total addressable market. So I think there are themes within tech you definitely want to have exposure to. However, I do think there are other areas that are just much better values at this point. So I'm not sure it's all or nothing. I do think that it's just going to be maybe more of a balance between some of the value names, some of the underperformers, plus some of the technology companies.
I haven't talked to you in a while, Steph, and so I don't know where you stand in terms of your holdings of the FANG stocks. Have you trimmed at all as we've seen some of these stocks really run?
The FANG stocks, yeah. I mean, I have been trimming Meta. I mean, it was one of my largest positions. It got to 8% in terms of a position in my portfolio. I only have 25 names, so 8% is really big. So I did trim that, but I'm still involved there. And I've also been trimming some of the semiconductor companies like Broadcom and Lam Research. Again, these stocks are up so much on the year, and I think it's prudent to take profits and redeploy that into these other areas that we've been talking about, where I think that there's probably some better value, at least into the second half of the year.
Right. In terms of, though, redeploying, you wouldn't look, for instance, within the semiconductor sector and say, Intel has been a laggard relative to some of the ones that I've been trimming, so I'll find value elsewhere within that sector.
I mean, I think, to me, I mean, I like Broadcom, I like Lam Research. Those are the two that I'm going with. And if they were to pull back meaningfully, then I would add them right back. So I still like those. But I think there are other areas, Melissa. I would be buying something like a Delta, right? I mean, the demand has been so strong. And the CEO was actually on Squawk Box earlier this week talking about the goods to services theme just being in the middle innings, right? So they actually raised guidance. The stock trades at 8 times earning. I like FedEx. FedEx actually quietly has been beating estimates for the last 3 quarters, and there's upside on the margin front. So I think there are some other places that are more exciting to me on a valuation basis, but certainly not giving up on tech. And on any pullbacks, that's when you want to take a look.